Welcome to this webinar, Creating a Successful Implementation Plan for the IR35 Rules. We'll give it a moment to allow everyone to connect, and in the meantime, whilst we're doing that, you'll see coming up on your screen a poll question which we'd like you to answer, please. There we go. How confident do you feel you are prepared and have a plan for April 2021? This will give us an opportunity to gauge the level of understanding that we're starting with, and we'll check again at the end just to see how effective the session has been. So please fill that in for us. If you've got any questions as we go through the session, please send them via the Q&A button and we'll answer as many as possible as we can at the end. We got a good attendance today, but we'll at least look to pick representative questions and cover them. You may also have seen the earlier event we did together, which introduced this subject and gave an overview of the rule changes. So if you'd like a copy of that recording, also let us know by the Q&A button and we can pass that on. Right, okay, I think we're ready to go. Welcome to today's webinar, brought to you by Bird & Bird, a top 20 UK law firm, and a truly international presence with more than 1,300 lawyers in 29 offices throughout Europe, Middle East, Asia Pac and North America. They're joined by the Giant Group, a leading service company providing specialist end-to-end workforce management software and services for the last 30 years. Our subject is creating a successful implementation plan for the new IR35 rules. Not surprisingly, many have left IR35 to the new year to-do list with everything else that's going on, but therefore the need to address it is now urgent. These changes come into effect on the 6th of April for many. This session assumes your knowledge of the principles as we seek to delve into some typical scenarios and practical options where we will try and anticipate many of your questions. The session is going to cover a recap on the new rules and their implications, what we need to have achieved by the 6th of April, the difference for all parties post-April, the processes you need to have put in place, and then the practical payment options and their relative merits. Our keynote speakers today are from Bird & Bird, Zoe Feller. Good afternoon, Zoe.
Hi.
Zoe is a tax lawyer specialising in corporate, asset finance and structured finance transactions. She works with UK and international companies to put in place the most effective business models to ensure their brand will thrive and has great hands-on experience in fintech and other traditional banking sectors. Alongside Alison, she's been leading Bird & Bird's work on IR35 and has advised a number of clients on their contractor assessments over the last 18 months. Also from Bird & Bird, we have Alison Dixon. Good afternoon, Alison.
Hello.
Alison's a partner in the International HR Services Group with more than 15 years experience of advising clients on complex employment law issues. She's based in London and advises on the full range of contentious and non-contentious issues. Together with Zoe, she's been heavily involved in advising the firm's clients on their preparations for the new off-payroll rules. Alison's a regular contributor to Bird & Bird's Frontline Employment Law case update publications. From Giant, we have Dan Haslam, who's Group Sales Director, and his role includes helping clients to manage their contingent workforces compliantly and cost effectively using the whole range of Giant's services and products. Good afternoon, Dan.
Hi, all.
Dan is also a member of the board of the FCA, the UK's leading membership body for umbrella companies, limited company accountants and CIS payroll providers. I'm David Hopkins, a workforce management consultant with Giant, and I'll be the chairperson for the session. The format today is going to be conversational. I'll put my questions to Zoe, Alison and Dan in order to give us a full view from a legal and practical perspective. We'll then turn to your questions from you, the audience. We anticipate quite a few questions, so feel free to submit yours as we go through the formal session. We want to hear from you. We've allowed 15 minutes at the end and we'll cover as many as we can. If you've got any which are very specific to your situation, then we will, of course, be able to approach the speakers afterwards with the details that we'll send you. And just to let you know, finally, before we start, we're broadcasting remotely today, so apologies in advance for any sound or technical issues. We're also not expecting any fire alarms, so if you hear one, you better go and check what the kids are cooking for your lunch. Okay, let us begin. Zoe, if I may start with you, please. Can you give us a brief overview of what we discussed last time? What are the new rules? When do they come into force? And what do they mean?
Of course, thank you very much, David. And firstly, I'm going to apologise. My internet seems to be incredibly unstable today, so I'll turn my video off if that seems to help the connectivity. I think the one point that really I think is that everybody needs to know is that from the 6th of April, if you are engaging anybody who is operating through an intermediary, such as a personal services company, then you will be obliged to assess that person's deemed employment status for tax purposes. And that's an ongoing obligation, and you will then be required to issue a status determination statement. So in a little bit more detail, the change is actually really only who has to be carrying out that status determination assessment. In the past, for the last 20 years or so, it's been up to the intermediary to make that assessment. And I think the feeling that HMRC has is that PSCs haven't been making that correctly, and you'll have seen an awful lot of high profile cases going through the court, not least Lorraine Kelly and things like that. And so the view was taken that rather than getting the PSCs to make that assessment, they would get the end user or the client to make the assessment as to the deemed employment status. And this change was actually introduced in the public sector back in 2017. So we've had a few years to see the way the market's going to move. As everyone will know, the original implementation date was last April 2020, but due to the pandemic, it was put back until April 2021. I think it's really a revenue raising activity. I think it is a way of HMRC getting a bit more income tax out of people. And I think the key points to remember are that it only applies to companies that are medium or large, so small businesses are outside the scope. It's only relevant to contractors that are operating through an intermediary, and in general, I would say 99% of those intermediaries will be personal services companies, but it can also apply to partnerships or even individuals, and it only bites where duties are being performed in the UK. So if you've got a contractor who's working out of their home office in Switzerland, then you don't need to worry about IR35 at all.
Okay, yeah. To Alison then, what do businesses need to have achieved by the 6th of April?
Thanks, David. Well, I think there are kind of two key chunks, and firstly, most obviously perhaps, they need to have dealt with any existing contractors that they have on their books, and that kind of breaks down into three steps. First of all, due diligence. Where are your contractors that are caught by these new rules? Which of them are going to be needed in the business beyond the 6th of April? And what are their contractual arrangements, and how do their working arrangements work in practice? And with that information, you then move to step 2, which is assessing deemed employment status, applying the test established through case law of what their employment status is for tax purposes. And then that takes you to your third step. If you've got contractors, limited company contractors who are likely to be deemed employees, you need to decide what you're going to do with them. What are your options for continued engagement of those contractors? And assuming you don't want to keep them as PSC contractors and put them on your payroll, you'll need to negotiate new terms with them, terminate their existing contracts. And I think even if businesses were quite comfortable that they were ready before the 6th of April 2020, I think it's advisable to look again now at your business, because there will definitely be companies where all the good work was done preparing, but when the delay was announced prior to April last year, there will have been high-risk contractors just left where they were for the time being, because it's easier than trying to deal with them. And there will be other, contractors that were taken on a short-term basis with the idea that they would be off the books by 6th of April 2021, where the business is now realising that they will need them for longer. So still work to do, I think. And then the sort of second chunk of preparation that needs to be kind of achieved is putting together a process for onboarding contractors in the future in a compliant way. And I think we'll talk a bit more about that later.
Right, okay. So given there's so much to do then, Zoe, what are you doing with clients now to help them to prepare?
Well, as Alison says, there's a lot of looking at what has happened in the last year. So even if businesses were already ready this time last year, there will have been changes. So we've been looking at contractor pools to check that everybody who is going to be there after April will not be a deemed employee. A lot of the supply agreements with agencies were kind of in the process of being looked at, but that hadn't necessarily been finalised. So we've been looking at supplier agreements to make sure that businesses have the right information to enable them to make status determinations, or if they want a complete prohibition on PSE contractors, and that's included. So there's a lot of things like that. And then just checking, dotting the I's and crossing the T's, that that the policies that are being put in place are the right policies for the business going forward. I think that there's been a change in mood in the last year, as we've talked about before, and where some businesses were saying they wouldn't be using contractors anymore this time last year. I think the last year has proved the need for a contingent and flexible workforce, and therefore that contractors aren't going anywhere in the short term, and so actually policies have been changed and updated to reflect that.
Yeah, okay. So in practical terms, Alison, what's different if a business is going to engage a contractor now or after the 6th of April? What will they do differently than they have in the past?
Well, I mean, I think broadly speaking, the legal and financial risk for end user businesses of using PSC contractors will be much greater. So because of that, businesses that are affected by these rules are going to have much better and potentially much more centralized controls on the engagement of this type of labour. So they will have to look at proposals to engage PSC contractors much more carefully before they go ahead with hiring, making sure that anyone who has in their business who has authority to hire people in this way is properly educated. So as Zoe said, putting together a proper policy on engagement of limited company contractors, preferably in writing, and supporting that policy with training, I think is going to be quite important. And for businesses that use contractors in this way, they're going to have to make sure that they have obviously a decent, up-to-date, robust contractor agreement. They'll have to have a process in place for assessing deemed employment status, issuing status determination statements where that's legally required, and crucially keeping those statements under review to make sure that any changes in the risk profile are caught and addressed quickly. So basically, what were low risk, low value commercial contracts and kind of treated as such in many businesses are that they just won't be low risk anymore. And that really does require quite a big change in the way many businesses deal with this type of labour.
Yeah, so if there are changes then in the way that and how businesses will operate, so what processes have you seen being put in place, what new ones to deal with these changes?
I think that what we've seen is that businesses are realising they need to do a lot more thinking earlier on in the process. So at the point of deciding on the role, deciding that you need to resource and find a resource for something, you're thinking about whether or not that person is likely to be a deemed employee or not. Some of our clients have introduced a sort of threshold questionnaire where you need to be able to answer all positively, or at least 4 out of 5, in order to be able to proceed with a PSE contractor, because what they've realised is that they don't want to have any PSE contractors on their books where they'd need to issue a status determination saying that they were a deemed employee. So they've got these kind of threshold questions before you even get to contract stage and before you even really start interviewing people, where you work out whether it's going to be on which path you're going to go. Are you going to be looking for a contractor who will be a genuine contractor, or really do you need to look at the alternative solutions? And I think that then so what we've done is we've developed an online tool for our clients so that they can record those assessments, make sure everything's in one place, and automatically issue their status determination statements as well, which is obviously helpful for them. But I think that having all that information in a single place is really important, and making sure that you're keeping records, because you need your status determination statements to be reasonable in order for them to be valid, and obviously keeping records of how you've made those determinations is really, really important.
Yeah. And I think it's just worth also remembering that end user businesses need to do this for their direct PSC contractors, but also for anyone who is supplied as a PSC contractor via any intermediary. So, you know, where there is an agency or more than one agency between end user and the PSC, as Zoe said, you need to make sure that your commercial contract with your agency is updated and is sufficiently protective of you as the end user, and taking into account that all of the parties in that supply chain need to cooperate with each other to make sure that this legislation is complied with. And I think you just need to be comfortable that you've got sufficient control over the engagement of PSC contractors, as Zoe said. So, you know, potentially putting in a prohibition on engagement of PSC contractors, or at least some kind of threshold consent requirement. And then, you know, making sure that you can obtain all the information that you need to carry out a status determination statement, because in a longer supply chain, you need to look at all of the contractual arrangements that are in play. And that means the contract between the agency at the bottom of the supply chain and the PSC, which you're not party to. You need to know that you can get hold of that and in order to do your assessment.
Yeah, okay. So those questions then cover the preparations required to manage the risks arising from the changes. But let's now look at how some of the other practical requirements can be implemented. Particularly in how contractors are going to be paid, because we understand the majority are going to change the way that they are paid. So if I can turn to you, Dan, can you outline for us the various payroll options and their relative merits?
Yeah, sure. Good afternoon, everyone. Well, there are a number of different options available. I suppose the first starter for 10 would be that the client may well decide to take people on a permanent basis and actually directly employ them. So that is an option. I have to say I don't see it happening very frequently at all for a number of reasons. I think hirers are generally keen not to be increasing their own employed numbers, as Zoe mentioned earlier. I think if the last 12 months has taught businesses anything, it's that they need to remain agile with the workforce. So that is an option, but tends not to be explored. Often more the case that what a business will look to do is actually outsource that payrolling of workers through an intermediary, which could be a recruitment agency. It could be a business like us at Giant, who effectively then will manage those workers and deal with the payroll, deal with the taxes that need to be deducted, and do all the RTIs with HMRC, etc., etc. In terms of different payroll models and what the look and feel on them is, then you've got umbrella as probably the default. I'd expect 70% of contractors caught by IR35 will potentially find their way through to an engagement with an umbrella company. And what an umbrella company does is employ contractors, so they have employment rights, receives funds through from either the hirer directly or through a recruitment partner, and then make sure all the necessary taxes are deducted. So I think that'll definitely be the sort of main go-to strategy for a lot of businesses. You've then also got a deemed payment model. So that's where a contractor could be caught by IR35 but still wants to be paid through to their limited company for a variety of different reasons. And therefore what the hirer would need to do is then make sure they deduct the relevant taxes due and then make a net payment through to the limited company, the PSC's bank account. That is quite complex, because what you're doing though is taking an accounts payable system and then starting bringing PAYE as an overlap, which is not normal for payroll systems. So again, if there's a requirement for that, you'll often see businesses looking at outsourcing it to a specialist payroll partner that can manage that process for them. And then the third payroll option, which I hear mentioned more and more in the market, and we've certainly been talking about it for a couple of years now, is something called Professional Employment Organization, or PEO for short. If you look over to the US, you don't have umbrella businesses over in America. You have these businesses called PEOs, and they're vast. They've got hundreds of thousands of contractors within them, and they are often used for managing not just contingent workers, but also permanent staff as well. That model is now being talked about more and more over in the UK. The look and feel of it at a high level is very similar to umbrella. The PEO business would employ the workers. The PEO business will be dealing with the tax and producing wage slips. But the key difference between that and the umbrella is that when the worker on boards, they're specifically told the PAYE rate that they are accepting, and they see that number very clearly on the wage slip. think that's important to make that distinction, whilst the umbrella also does a similar thing, because there's other deductions on there and the contractors can see the employer's national insurance and other items coming out that they're not familiar with. It can create noise and confusion sometimes. The PEO cuts through that. You just tell the worker the PAYE rate that they're on, and the PEO company then facilitates it. And I think when we start thinking about a world post IR35, there's going to be a lot of noise, I think, around worker status and how people are onboarded. You know, Alison's mentioned it a few times about having a rigorous onboarding process. So the ability to be very transparent at the beginning and tell the worker very clearly the rate that they are on, I think does have some merits moving forward. But they're the sort of key options, and it's a question of whether a business feels they can facilitate it themselves directly, or if they may choose to outsource some of that.
Yeah. So putting that to Alison and Zoe then, what's your take on the various options from an employment law and a tax perspective, Alison?
Yeah, so just looking at the employment side of things, I mean, I guess, you know, if someone's an employee for tax purposes, you know, why not make them an employee for all purposes? But Dan has obviously pointed out that, you know, that there are kind of likely to be certain kind of concerns with that. In terms of cost, obviously you have the cost of providing all of the benefits that you provide to your employees, all of the sort of health insurance and all of that good stuff, and the additional statutory rights that employees have. You know, the key ones being unfair dismissal after 2 years, obviously the right to a statutory redundancy payment, or kind of rights to maternity pay and leave, and so on. But there, you know, there are upsides to employment. You have more control over your employees. They have more extensive implied duties contractually, and any IP that they create in the course of their employment automatically vests in the employer. But you know, there is, I think, a reluctance on the part of businesses to go down this route for people that they have traditionally treated as contractors, for, you know, financial reasons, and as Dan said, the need to kind of remain sort of agile. So I think, yeah, what we've seen most of, consistent with what Dan said, is end users asking contractors to effectively ditch their PSCs, sign up with a third-party agency, umbrella company, PEO, or, you know, whichever of those they think is most kind of attractive. You know, the end user in that scenario is likely, but not certain, to be insulated from the sort of majority of employment-related claims from people who are supplied to them in that way. Because the current sort of state of the case law is that employment tribunals don't like to imply contracts between an end user and what's effectively an agency worker, unless it's necessary to do so. And in a situation where you have a chain of contractual arrangements that correctly reflects what happens in reality, the court won't imply a direct employment contract. But that's a general rule, and specific circumstances may end up with a finding that an individual is an employee of the end user. And I would say that I think, you know, the more people are engaged under this type of model, the more we will see people trying to establish that they have employment rights against end users if they feel that they have been treated badly, or their engagement has been terminated in a way that they don't like. And it's just worth remembering, obviously, that agency workers do have certain specific statutory rights under the agency workers regulation. So after 12 weeks in an assignment, they have the right to a degree of equal treatment with an end user's comparable permanent employees. It's much less onerous than the kind of full suite of employment rights, but it mustn't be forgotten, and it will add to the cost for longer term agency workers.
Yeah. I think one thing I would also say on Dan's options is that we haven't seen any clients want to engage any PSC contractors as deemed employees, probably for the reasons that Dan said, that their systems just can't cope with making a payment from an accounts payable system through PAYE to a company. I've seen IT people's heads explode at the prospect of having to try to do that, and so I think that anybody who is a deemed employee, they are looking to move to different arrangements, but that does mean though that there are definitely a small group of contractors who are remaining as contractors and who will continue to be engaged by businesses on a specific project basis and come in and do those projects and then move on and do another one. And I think that those people, as long as there is a reasonable status determination as to how they've concluded that, will continue to work on that basis.
I think it's an important point to make there right at the end, Zoe, that we lose sight sometimes of the fact that actually there are some genuinely outside of scope workers out there, and HMRC would accept that as well, wouldn't they? They
Yep.
don't anticipate the entire market going inside IR35. There are genuine engagements out there that are outside, so there should be latitude to facilitate that. I do think though at the moment, and we see it regularly when legislation changes come through, that you will get a risk-averse reaction from clients taking a risk-averse approach, and then over time what you probably see is that maybe softens, and people take a bit more of a balanced view on whether or not they can facilitate assignments that are outside, look at working practices, etc.
Yeah.
And then no doubt there'll be another bounce on that when HMRC's rigor comes in and they start naming and shaming some clients, and everyone will reflect on it again. So you're probably looking at, I would say, 4 to 5 years before the market truly settles into a sort of BAU off the back of these changes. So it'll be interesting to keep our eye on it and see how things sort of mature over time.
I think actually this last year has been the first year of that. I think that a year ago everyone thought no more contractors, and then in some ways we sort of had a trial run to see where we end up. And I also think that possibly clients are more confident about taking genuine contractors who are outside the scope on the basis that they have reduced their pool of contractors so substantially that they're quite comfortable that the people that they've kept on are genuine contractors. Lots of our clients have probably reduced their contractor pool by 70%, if not more, so or changed the way that they're engaging them anyway. So I agree with you though that there's going to be some changes over the next couple of years as the market settles.
Dan, have you seen any warmth towards the deemed employment model from contractors wanting to retain their limited company, or for employers being amenable to paying them that way?
Yeah, definitely. I think I wouldn't over egg it though. I think my high level would be, 70% of the market umbrella, and you've probably got 10 to 15% that'll consider still wanting to get paid through their own limited companies. It's really interesting, as Alison was mentioning before, that you obviously get employment rights if you go through an umbrella company or if you go PAYE, but if you don't have any of that if you go down this deemed model, you're just being treated as for tax purposes as an employee, but with none of the rights. So no pension, no holiday pay, none of the statutory bits and pieces. So you'd take a step back from that and think, well, what's driving the contractors here to be keen to continue to operate in that way? And we certainly hear a few different themes there. I think one is IR35 is assignment by assignment, so they could well have other work that is outside, and just for continuity, they want it all to be continued to pay through the personal service company. You've also got, I think there's also a large element of apathy, just the fact that these contractors have been using these vehicles for such a long period of time, they've become quite attached to them and wedded to them. And I am a contractor in business, I do like to bill through Dan Haslam Limited, and I don't really like this umbrella thing, and the fact I'm an employee, I don't see myself like that. So some of them will just retain the limited company because that's the way they've always done it, even though from a tax take-home perspective, the vehicle loses all its luster really from a tax angle. The other one to consider as well is there's obviously an appeals process through the legislation, so the client's got to facilitate a 45-day appeal from the contractor. I have yet to see a client overturn its decision on an appeal. That's not to say it doesn't happen. So if you follow that logic through, then where does the contractor go if they really feel aggrieved around this inside determination? If they go employed, whether it's direct or through an umbrella, there's no recourse on what they're then viewing as this overpayment of tax because they're now employees, so the tax is being deducted at source legitimately. So the only way they could continue to pursue the argument and go for any claim of this unlawful tax that's being deducted would actually be for them to put it on a self-assessment tax return. So they have to be pretty brave now. They're putting their heads up above the parapet to HMRC. So you might see some people wanting to continue to bill through the limited company just purely because they want to continue pursuing the argument. So there's a variety of different factors at play there.
Yeah. Okay. Now you mentioned that 70% of these workers are likely to end up being routed via umbrella companies. An umbrella, has to be said, doesn't always attract the best publicity. A straight question to you, Zoe, are they a good idea or a bad idea?
That's a very difficult question. I think that, there have been some unscrupulous umbrellas out there, and, Dan talked about the deductions that get taken, agency workers or workers may be expecting a certain amount, and suddenly an enormous amount of their gross pay goes for all sorts of different costs. And HMRC has been running campaigns for the last year to raise awareness of some unscrupulous umbrella companies, specifically targeted at healthcare workers going back into work in the NHS during the pandemic. It's definitely therefore something that's on HMRC's radar. And as a tax advisor, I think what I would always say is, if it looks too good to be true from a tax perspective, it probably is. And I'd be very skeptical about signing up to an umbrella that was promising anything, significantly different to the rest of the market.
Yeah.
So I could come there if I could come on there as well, Dave. I think so. It's I think one of the problems right from the beginning is this term umbrella company, because a lot of what Zoe's referring to there in terms of those behaviours are models that I would not recognise as a straightforward compliant umbrella model, but unfortunately the term gets used as a catch-all for any sort of payroll scheme that people might use. In our industry, I'm putting my FCSA hat on now for a little bit. We take a lot of time within our industry to try and regulate, and have come up with our own set of codes under the FCSA to try and bring some rigour into the payroll industry. I think it's completely unacceptable, in my opinion, that the industry is not regulated properly under sort of an FCSA style banner. It should not need the industry itself to try and regulate itself. I think it's payroll, we're dealing with people's tax, it should be regulated. So we know that the government are looking at legislation moving forward as part of the Good Work Plan to bring the regulation of the payroll industry underneath BASE as the government department, BEIS. So that's really welcomed. But all that said, that's off in the distance. So one thing I would say to any hirers that are on this call today is that please do your due diligence on who's in your supply chain. Have your own RFIs that you send out. By all means, use an authority like the FCSA as a sort of badge of approval, but I would not just take that as read. I would do your own due diligence. That way, if there is any issues further down the line, you can point to due process. You can see that you've done everything you could to check that those businesses are compliant. I think, trading history is important. The strength of the balance sheet is also important. A number of times that I see very small payroll providers involved in supplying services to companies that are ultimately multinational businesses would concern me if I was that multinational business looking down in my supply chain. So I think just having some checks and balances there and some good practice on supply chain compliance is key. Because frankly, if you get the wrong suppliers in, then it's a bit of a moot point around IR35. You've got a whole other world of risk and pain to be dealing with, aside from just doing status determinations.
Yeah, and I think that whole thing's now exacerbated because as the risk now falls on end hirers, it's becoming their responsibility to understand fully and police that supply chain. So from our side, we're really glad to see the number of requests coming through, questionnaires, asking these detailed questions. It gives me comfort that we're partnering with the right businesses that take that approach, because it's important, because as Zoe mentioned, the people that often lose out here are to these unscrupulous payroll providers are low paid, NHS frontline workers. It's a travesty that those guys will be targeted by these sorts of schemes, but it's important that people have some of that checks and balances in place, because none of us want the reputational damage that could be brought about by having the wrong payroll provider in your chain. Okay, good. Right. Thank you to our speakers so far for your responses. We've received quite a number of questions and we've got a bit of time to address those now, which we will do. just before we do that, can we just put the poll question up again, please? And let's see if we've managed to shift anybody on the scale over the last half hour or so. Just give you a second to come back on that for us, if you will. As I said, we've got.
This is where we become nervous now, don't we? That we've not moved the dial, ladies, and we've just confused people further.
Yeah, absolutely.
Yeah, we don't want it to go the other way.
Exactly. Yeah. Okay, right. So whilst that's there, then let me get started on the questions. And the first one is, I think it's to you, Zoe, initially. Can you please summarise the steps of the implementation plan, and what do we need to get started?
The implementation plan, as in the threshold questions and things like that.
Yeah, if you like, the stages that you need to go through from day one, if you like.
So I think the first thing that we would recommend is that if you're thinking about onboarding new contractors, the minute that role appears, you would look at that role and determine whether or not it was capable of being done by an independent contractor, or whether it's likely that the contractor role would be a deemed employee. And there's some simple questions to answer on that. Is it being paid by? Is it specific deliverables that need to be achieved? Who's going to be controlling that person? Will they be subject to the same controls as employees? Would a substitute be acceptable? And how are you going to pay? Are you going to pay on time and materials or completion of the task? And then are there any other employees doing similar roles at the time? And I think if there are other employees who are really doing similar roles, then you're probably not looking at a genuine contractor role. So then you immediately at that point stop and then have a conversation about how you're going to hire that person, and do you have headcount even for a fixed term employment contract, which isn't something we've really talked about today, but sometimes that is exactly what you're looking for. Maybe maternity cover, something like that. That would be a fixed term employment contract, and relatively limited rights, I would have thought, from an employment law perspective as well. I think assuming that you are able to get yourself comfortable that you do have a genuine contractor role, you would then go out and do a more detailed assessment, either through the CESS tool or through one of the other available tools, to work out really how that role is going to be performed, and to make sure that you're able to substantiate an SDS that says that they are not a deemed employee. You want to make sure that your contract terms are along those lines as well. So some of the points that I just talked about to do with substitutability, and obviously how they're paid. And then finally, you onboard the contractor, and you issue your status determination statement. And then you just need to make sure that if the duties of the worker change at any point during the year, you examine again the SDS, and certainly if the contract is extended, you would definitely be looking at the SDS again. And you cannot assume that just because they were not a deemed employee this year, you would have thought that if they're still in place this time next year doing the same thing, there's a very good chance that they might then their status determination statement might have changed.
Yeah. Now you mentioned the assessment tools there. We have a question on that, which I'll come to a bit later, but just sticking to the process and the sequence, if you like. Dan, what's your take on what people are doing? Where do they start to get moving here?
Yeah, so I think again, Alison did a good job of mentioning it right at the beginning. Really, one of the key things I see is when we're talking to clients is they don't know how many contractors they've got. So if you sat there and thinking, I don't know how many I've got, don't feel like you're on your own. That's generally part of the course. So what you're really wanting to do for including IR35, but for other reasons as well, is create some sort of onboarding pinch point, so you actually understand how many contractors have we got. We've got the right onboarding processes for checking just basic documentation that's coming into play, and then that, if you then know how many you have, that'll start to inform how you're going to tackle this. If your numbers are small, so first of all, I think you've got a decision to make of actually are you going to do assessments. Well, one thing we've not really explored or talked about too much today is the fact that many corporates are coming out just neatly sidestepping this entire change by saying we're just no longer going to engage contractors via PSCs. So if you want a quick, rough and ready way of just not having to deal with any of this IR35 mysterious determination piece, just simply make a decision not to engage PSEs anymore. And if contractors want to on board, then they need to do it via an intermediary, and we've gone through those options. There are some costs associated with that, though. Potentially, you might see contractors not taking particularly well to that approach. You might have to increase the rates as a result, so there's some financial considerations. So I think it's important just to flag that as an option, particularly this late into the day. I see more and more businesses making that decision because they just haven't got the time to actually enact a proper determination process. But if you're then going to make a decision, say, actually, no, we are going to do determinations, how many have you got? That will then inform whether you can do it via CEST, which is quite manual, but can be done. I think it's appropriate for smaller populations. You've obviously got then other commercially available tools available. So the guys have pointed out, and they can support there. You've got other tools available in the market that people can use. HMRC have said you don't have to use CEST, you can use alternatives. Those alternatives are credible, in my opinion, because when you've got larger populations, the technology then helps with the process. So going through bigger populations, sending out the SDSs to people that are needed. So it's understanding those options. And then you've got further considerations around things like insurances. So we're well aware there are a number of assessment tools out there that are then purport to support with insurances. So if they gave it an outside decision, they'll then say there's an insurance policy in place that would cover that risk if HMRC challenged. I have to say I'm a little bit nervous about that concept. I don't think it'll be interesting to see how that plays out over time. If you've taken reasonable care in doing an assessment, there usually be no reason to be talking about an insurance-backed product. That said, I could understand if I was a client and I could take insurance on, I might as well, just for a bit of level of comfort. So that'll be interesting again to see if that's appropriate. And then it's really a question of getting your skates on and getting through those determinations, because off the back of making that decision, however you choose to arrive at, you've got to end the current assignment, start a new one, find out who the intermediary is that's going to be payrolling, get your operational processes set up there also. So there's a hell of a lot of work to be done over what is now quite a short space of time. I think for that reason, I think because of the level of effort and because businesses have got so many other things on the plate at the moment, the easy thing to do is to outsource it or to do that simple sidestep and say, actually, we don't want any more PSEs in our supply chain moving forward.
Yeah, okay. That plays nicely into the next question. So there's a lot to do. There's lots of stages to go through. So here's a piece of string question. What are the likely timescales? Let's say I've got 25 contractors as per the question. And I suppose the key thing is, what are the factors that might catch me out here? What's likely to take more time than I might expect? Because I've probably got, what, 6 or 8 weeks to go here. What are the things that are going to influence the timescale? What are you finding, Dan?
Well, I'll probably let the ladies go first on that, because obviously you guys are involved in advising the clients, and if there's anything I can add, I'm happy to do so.
Yeah. I think I would just say it takes longer than you think it's going to take. I mean, I guess if you've got 25 contractors all doing the same thing on the same terms in the same part of the business, managed by the same, part of the business, that's going to be quicker than if you've got 25 contractors scattered around in different areas doing different things with different terms and perhaps through different intermediaries. It's a big job, and I would say that 6 weeks is very optimistic in trying to do all of the things that you need to do to get those people sorted out and to get ready for this change.
Yeah.
Yeah, no, I completely agree. I think if you're looking at this not having started your assessments, then you really are under pressure at this point to do it properly and do it justice, and it's not something that you want to be cutting corners with. You've got to keep records, as Zoe mentioned before, make sure you can substantiate how you arrived at your decision, and then you've just got the communication piece as well. So things will settle down, though. I know there's a little bit of doom mongering here and a lot of work to be done, but I think one positive I would say is in 2017, off the back of the public sector change, there's this rump of contractors that had to be dealt with. But then after that, when roles are being released to the market and hirers are being clear on whether they're inside or outside, that's a lot easier because people know what the engagement is. It's just unfortunate we've all got a lot of work to do to get through this existing population that's sort of moving into the new regime.
Yeah. Okay, and assessments was mentioned, and the HMRC SES tool in there. So question around that, is it entirely safe to just use SEST? Will HMRC stand by the outcome, and what are the alternatives?
So yes, HMRC have said that they will stand by the outcome as long as all the information inputted is correct in the first place. I think that there will be questions as to whether the answers are correct in the first place, though, and I think that there may be challenges further down the line on that because the SES tool is binary. So you have to give, a yes, no, or a one, answer to a lot of the questions. Sometimes they can be confusing. There have been lots of criticisms of the SES tool, and I've certainly seen a couple of the way that the actual algorithm works, I think, is incorrect. If you answer yes to a couple of questions, then you're automatically deemed to be outside IR35, whereas actually, if you really look at the relationship, it should be inside IR35. But HMRC have said that they will stand by those SES assessments. I just think that they will probably argue in those kind of cases that the questions haven't been answered correctly in the first place. Dan has said that there are other tools out there, and that's certainly right, and certainly ones that use a degree of AI to do the SES assessments. When you're doing big populations, I sort of think we're coming to the end of that phase now, because I think that what's going to happen now, though, once we've passed the 6th of April and all the existing contractor pools are dealt with, then really it's a matter of looking at only new contractors and obviously refreshing existing SDSs where necessary, and so actually I think that a more nuanced approach will probably be more helpful for without a doubt, much less frequent occasion where people are going to be engaging PSE contractors going forward. I don't think you'll have a need to assess 100 contractors in a month again. So it's more a matter of finding the right tool, or even not using a tool and just being a bit more subjective about it, in order to assess contractors in the future.
Dan, what are you seeing with alternative approaches?
Well, yeah, I think I covered them off before, Dave. I think they're out. The tools are out there. I think that for those that are in the know, that know the detail around IR35 and the various topics, we all feel that SEST is a little bit limited. It doesn't go into mutuality of obligation to the extent that Tribunal would. So it feels like a bit of a miss, although HMRC seems to be pretty adamant on the point. So I think there is some merit in these other tools that take a bit more of a balanced approach. SEST is very binary as well, so it'll come out and say it's either you're a pass, you're a fail, or then you're unfortunately undecided in about 15 to 18% of the time, which isn't massively helpful. Some of the other tools that I've seen actually have like a red, amber, green approach. There's a bit more of a scale, so you get a sense of, well, where are they in the, the inside or the outside parameters, and it will also feedback. A lot of them will feedback on particular areas where people are weak. So from, is it control that's causing the issue? Can you review your working practices? So there's that sort of feedback loop from them. But ultimately, it doesn't matter how you come to that decision. You don't have to use any of these tests. You may just sit there yourself and do the sort of walking like a duck and quacking like a duck test. Because I think the reality here is that in 90% of the cases, you can tell yourself instantaneously whether or not someone is inside or outside just on basic conversation. It's the trickier bits going into these details where there's a lot more specifics around it, and that's where you're going to potentially need some support. But if you can carve out the majority and deal with them first and then deal with your exceptions later, that's probably a good approach to take. If you're just reducing the number of people that you need to drill down on, then that hopefully will speed up your process.
Yeah, okay. A couple of questions now relating to the payment of employers' national insurance and who does that. So let me read this one to you. As a recruitment agent, I'm currently negotiating with contractors about their rates post IR35. One issue I've found is that contractors are uncomfortable with being responsible for paying employers' national insurance, as they might well be, as well as their employees' national insurance. Is this correct? And if so, which party should be covering employers' national insurance?
I'm happy to sort of take the lead on that one, because it's definitely our world, and you hear this. I hear this regularly. The unlawful deductions are being taken here, and why am I being asked to pick up these bills? And it's often stems from the fact that the contractors aren't clear on the contractual arrangements that they're entering into. So that the key factor here is, if you're the fee payer, as in you're the party that's paying the contractor, the PSC, then it's your responsibility to make sure these taxes are being deducted. If you're going to work through, if you're going to move and operate through an umbrella arrangement, let's say, so this contractor, let's put some numbers on this, let's say a contractor on £500 a day is now deemed inside, and they're moving to be payrolled through an umbrella company. What happens? Well, from the £500 that the umbrella company receives, the first point to make is that that is not the contractor's money. Legally, that is the umbrella company's money, okay, because that's what the contract chain says. So from that £500, the umbrella, as the employer, has to deduct employers' costs. So they will take out employers' national insurance. They'll take out apprenticeship levy if they're qualified for that. And they'll obviously take out a margin. And then the bit that's left over after all those deductions then is the gross taxable pay of the worker. That then is legally the contractor's money. And on that number, you then base your PAYE and your employees' NI calculations, etc. So the fundamental reason the question's being asked is, there's a contractors do not accept that that £500 is not their money. You know, of course it's my money. That's what used to get paid through to my limited company. But under the umbrella arrangement, technically it's not anymore. It's the umbrellas, and that's why they are legally entitled to take those deductions, leaving the worker with their gross taxable pay. If you follow that logic through, you then understand also why that PEO model that I mentioned earlier has got some airtime at the moment. So in my example, the £500 down to the gross taxable is probably about £433 a day for the worker. So the actual rate that worker is on is £433 a day. Under a PEO, you would tell the worker that right at the beginning. So you're going to go on PAYE with us at £433 a day. And that's very clear and very transparent that the contractors understand that. But they definitely do get het up, and I think there's a lot of noise around umbrella companies making unlawful deductions, which is unfair. It's because people don't fully appreciate how the umbrella contract and model works. So hopefully that answers that question and gives that person a bit more comfort to sort of push back to those queries.
And are you finding that this employer's national insurance is being passed to the contractor in the main, and are there situations where the end hirer is actually covering it by effectively raising the rate to give them the same net, if you like?
Yeah. So if we're all agreed that we understand that that's just the way the models have to work and those deductions are taken, then there's a second consideration there, is actually, is the hirer going to give a pay rate increase, sort of increase the bucket to offset these taxes that are being deducted, which is obviously a separate question. And yeah, I do see examples of that. I'd probably say maybe 15–20% of contractors we're probably seeing that will get uplifts. Some businesses will say, we're not really wanting to pick up the entire tax bill here, but perhaps we'll increase to cover the employers' NI and the APP levy, so maybe a 14.3% increase to sort of help soften the blow and take some of that steam out of it. But generally, it's only where clients are worried about losing contractors because there's going to be disruption to business continuity. Some very rare examples where I've seen clients actually increase the rate all the way up to cover the PAYE taxes, but it's like you're talking nearly 30% increase there. So that happens very exceptionally. Unfortunately, the majority of contractors are being there's no more money in the coffers, and they're having to feel the impact of these taxes now coming out from the rates as I've described before.
But I guess, though, the more urgent the issue becomes and the closer you get to the 6th of April, and the more you need a contractor to continue to work for you after that deadline, the stronger their negotiating position may be. So you may end up paying more the longer the delay is, that, if the more urgent the issue is.
Yeah, absolutely. There's a bit of a Mexican standoff going on at the moment between contractors and clients, and we're certainly there saying, come on guys, how's things going to pan out? But it's all about rate negotiations at the moment. I think mostly the assessments have been and done. It's now into the hard maths of supply and demand, and if the contractor's important enough, they've probably got a bit of a strong hand to ask for that rate increase.
Yeah, we've seen different approaches within the same organisation. It comes down to supply and demand, and how business critical the contractor is.
A question now on timing, which I think, Alison, this is something you talked about earlier in terms of having to stop contracts, write new contracts and start again. The question is, what do we do if we have contractors already in signed contracts which run past April, who are deeming themselves outside IR35 and being paid into a PSC, but who will now fall inside in their opinion?
Well, if you don't want to put a PSC on the payroll, that's a contract that needs to be renegotiated. I mean, I guess there's one situation where, you know, you might be able to continue, which is where you have an assessment that is borderline. So they are high risk of being a deemed employee, but you could make tweaks to the way they work or other kind of you know, changes that bring them outside of the scope. But I think that's quite a limited group of contractors, as Dan said before. You know, generally speaking, you know, one way or the other, and tinkering around the edges is probably not going to change things. So yeah, I think in that situation, you know, there's a renegotiation that has to happen.
Yeah, and the point, sorry, just one point I was going to make is it's sort of irrelevant how they treat themselves. You know, the whole point is now that it's up to you as the end user to be making the assessment, and if your view is that they are inside IR35, then you need to be having that conversation with them. The risk is all on the end user now.
Yeah, no, completely agree. There's definitely got, if this worker's now being deemed as inside IR35, you've got to end that assignment and start a new one. Otherwise, you would potentially expose yourself to unlawful deductions and all the rest of it if you're taking money from an existing assignment piece. So in all instances, if someone's being deemed as inside, you should be starting a new assignment, recalculating the rates, and obviously potentially, you know, engaging another party in that supply chain to manage it moving forward to ensure there's a clear break.
And I think probably time for one last question, and it comes back to perhaps how we engage with contractors. And we've heard about statement of work contracts being a potential sort of mitigation, if you like, against IR35. And the question is, what part can statement of work contracts play in retaining contractors outside of IR35? Alison?
Yeah, I mean, you know, the assessment of deemed employment status is, you know, the contract is relevant to that, but it's all of the circumstances and the way it works in practice that is key. So, you know, a statement of work contract, you know, a master services agreement under which you enter into specific statements of work for particular projects, that's a very kind of commercial form of agreement, and it's consistent with, you know, self-employed status. But if you've got a contractor who signs a statement of work for a project that lasts a year with a day rate and they don't do anything else, then the fact that that they've entered into that contract doesn't really make a difference to the assessment of deemed employment status. So, you know, I think the contract structure is important, but it has to reflect the reality of what's going on. So yeah, I think too much focus on that means that you're ignoring the bigger picture and the bigger risk, I think.
Yeah, I was just going to add into that, the ones I see it talked about a lot, the ones that would have a bit more credence for me are the ones where there's some risk coming into it from the contractor's perspective. Just having an ongoing monthly payment is just window dressing, isn't it? You know, if there's some risk of the non-payment to the contractor, or there's some withholding of money, so if there's some actual risk in there, I think that's a key factor to make these statement of work contracts actually fly. And if they're done properly, then yeah, absolutely, it probably does take them outside the scope. But the reality is contractors don't want to accept contracts that have got that risk. They want the fight, you know, the day rate paid when they come and turn up for work. There go.
Mutuality of obligation.
Yeah, exactly.
One very last one. I think this is a quick one, and keep our audience happy if I can sneak this in. As an agency with a turnover of 800,000 a year, who's supplying nurses and carers, can we use PSC contractors? I think there's a clarification required there, just as to who's actually responsible, if you like, for them being PSC contractors.
Mm-hmm.
Well,
I would've-
go on, sorry, you go.
But no, I was just going to say it depends on who you're supplying them to, and the terms of your contract with that person. So if you are supplying to somebody who has a prohibition on PSC contractors, then no, it will all come down to the contractual terms. It may be that they allow them, but you'll have certain obligations regarding information passing, and as likely the person who's making the payment, you'll need to be accounting for tax when you see that status determination statement.
Good.
Yeah, I think the turnover number there is a bit of irrelevance, isn't it? The
Yes.
turnover is relevant to the hirer, so not the agency, but whether or not the hirer is a small company and therefore outside of the new rules. But ultimately, if the client is medium or large and they are the fee payer, then Zoe was spot on. Then you can pay off to PSEs, but you need to be comfortable that that's appropriate and that you're deducting the right levels of tax if you've been told they're inside.
And also a point to note there is if they're in the public sector, then the medium or large is irrelevant. So if it's a public sector end hirer, then they are definitely within the rules.
Okay, good. Thank you. Right, I think that's about all we have time for today. Many thanks to our speakers and to you all for your attention. I trust it's been worthwhile. I'm sure you're all desperately wanting to understand what happened with the poll. So here we go. I think we started off with nobody very confident, and you'll be delighted to know we now have 7% who are very confident. So well done on that. The number who were not confident at all has remained the same. So whether they've moved from reasonable to not, I don't know. But so we've now got 13% who are not prepared, 80% who are reasonably well prepared, and 7 who are very prepared. So those of you who are not prepared, more homework to do. And as I said, we'll be passing the contact details for these guys to you. So please feel free to contact them if they can help. We will be following up with a link to a recording of this session, and there'll be an email containing a quick questionnaire just to let us know how we've done. Contact details for Alison, Zoe and Dan. There'll also be a note of the link to the previous session, which obviously ties into this and goes into more detail about the assessment process and the various options there. So thank you again for your time. Thank you, I'm sure, from Alison, Zoe and Dan, and have a good day. Thank you.
Thanks very much.
Thank you.
Bye, everyone.